welcome back to episode 2 of The Daily Dollar. This is season 2. I'm Art Morrison III.
I'm Cait McCready.
And we are back with another episode. Listen, I gave you the rundown last episode, so I'm gonna save my breath and your time. On this episode, we're gonna dive right into it. Ready for the question of, dang bro.
You talk a lot, so I have to jump in when I can.
Yeah. I was trying to lobby the alley-oop. Are you ready for the question of the day?
No.
You're not.
Let's go.
All right, cool. Question. Will real estate crash? Will prices go down, right? This is a question everyone's asking. Will real estate crash? I have a strong opinion about this. I don't like the word crash, right? Crash gives like a negative feel, like it's a bad thing, which I guess it is, right?
For some.
I don't, all right, so just help my brain, it's been a long day. How would a real estate crash be bad?
For somebody who's in a short-term investment?
Okay.
Yeah.
So if they were to convert that short-term investment to a long-term investment, would it be bad, yeah or nay?
They have to have the strategy and ability to do that. So if they don't have that, like
So if they're a crappy investor?
Sure, yeah.
I'm just saying, so, but really, even in short-term, when I teach all my short-term clients, when you're talking about buying real estate to flip, that's what you mean by short-term,
yeah.
Right?
Yeah.
You have to buy it in a way that you can sustain it long-term. AKA, if you get stuck with the property, will it make you money?
Yeah.
If you get stuck with a property, can you still at least break even? Will it still be a good investment if you said, okay, we can't sell it now because the market's weak. We're gonna rent it out for 2 years and sell it later. Now, depending on your situation, I don't wanna sound like,
Yeah, you do sound very like
well, I'm saying
high
that just
and
to, I'm trying to like give people a different perspective so that like if you look at real estate that way, that's half the mentality. Looking at it from like wow, there's so many options. We talk about the benefits of real estate. You got equity, you have cash flow, you have tax advantages, right? You have the power and control over that land. We always talk about those over and over.
Yeah.
So you can't throw those out the window and replace it with the word crash, you know what I'm saying?
Yeah, you're a very solutions-based person, so I think that's
Yeah, I feel like you need to be that way in real estate because it's volatile, right? It's like, you don't know what's going on. So like if I buy a property with mad equity in it, but I'm renting it, and the tenant stops paying me or whatever, right? The tenant's being, like something bad happens from a long-term perspective, right? We're talking opposites. No crash, nothing, just the tenant ain't paying or they're ruining your house. I'm still like, well, it's still a good investment because that house is appreciating in value over time just by holding the asset. I still have that equity in the house. I still have the ability to fix up whatever the tenants are messing up or replace the tenant. So like even if I lose a year's worth of rent at $2,000 a month, I lost $24,000. But if you bought a $250,000 house and it appreciated just 10%, that's $25,000. You see what I'm saying? So like how long would it take your real estate to appreciate 10%? On average, real estate appreciates 4%. That's roughly 2.5 years it would take to make your $25,000 back. You know what I mean?
Right, yeah.
And it's like, if you look at real estate from that huge lens, I feel like you're just not concerned with something like a crash. Do you agree?
Yeah, I would, but I'm just talking for new investors. Trying to keep on the other side.
Yeah, so what advice would you give new investors from how do you think they should look at a crash then, if not the way I'm saying it?
Well, I mean, no, that is the way that you should look at a crash, but what I'm saying is, what we always say, just seek mentorship. If you're in a situation and you don't know how to get out of it, there's a way to get out of it or a way to make it, lucrative for yourself. So I would just seek mentorship. Not everyone has the resources that everyone else has sometimes.
But it's about finding those resources. Where can you find those resources?
The Daily Dollar podcast.
Oh man, I can't talk. The Daily Dollar, it is a little tongue twister.
Yeah.
The Daily Dollar podcast is a resource educationally, but I'm talking about actual resources, hands for you, networking, Facebook groups, go to local real estate investor meetups, friends and family who may have done this in the past, your contractor, realtors. Use all of these people as funnel sources for more resources.
Yeah.
More people who can help you in the deal. But you know what's funny? We didn't answer the question.
Will it? Will it?
Will it crash? Yeah.
I think inevitably it will, if not like
my
tomorrow.
My answer is no, right? That's my answer. It will dip for sure.
Yeah.
And we have to understand that real estate, like any other asset, I don't care if it's gold, any commodity, anything that over the long term goes up in value or is a good investment, it's always gonna have its dips. It has to. So what we experienced in 2020 and 2021 with the hot market, like we knew a dip was coming. It was just a matter of how you prepare for it and how much of a dip. I don't know what constitutes a crash. There's a specific stat. I should have looked it up before this episode.
Yeah.
But I don't foresee us getting to that point simply because the demand for somewhere to live is still so high.
Yeah.
Like people still need somewhere to live. So whether that's rent, if that's rent, and a lot of people need to rent, then that means that rent going up still makes property values go up. You see what I'm saying? It doesn't matter if someone's renting or buying, long story short. It don't matter if people are renting or buying. If a lot of people are in demand of it, it's gonna be very difficult for it to crash, right? It might dip, but it's gonna be difficult for it to crash. Now we can get into the whole interest rate thing. The Fed are hiking interest rates to deter people from buying. But again, they're just trying to slow down inflation. They're trying to get inflation back down to the 2% instead of, what is that, 9 or whatever the heck it's at right now. So just trying to stop the market from going crazy. But to answer the question, will it crash? I don't think so. I think it will dip. But I think as a real estate investor, you should always be prepared for dips. Yay?
Well said,
Nay?
yeah.
Listen, that's episode 2. See how easy these episodes are gonna be? Make sure you tap into episode 3. Don't forget to like. Man, why can't I talk? I need water. Don't forget to like, share, subscribe.
It's the Invisalign.
Yeah, maybe.
Yeah.
Get my teeth fixed, y'all. But anyway, don't forget, like, share, subscribe. YouTube, Apple Podcasts, Spotify, all your favorite podcast mediums. Share it with friends, family, Instagram, whatever. Speaking of Instagram, where can they follow you?
At Hi Cait McCready.
How do you spell your name?
C-A-I-T.
Last name?
M-C-C Ready.
I like that, MCC Ready. If you were a rapper, would you be MC Ready?
Probably.
Got it.
Yeah.
MC Ready, it makes sense.
Or Mick Ready.
Mick Ready?
Like my last name.
Anywho, Art Morrison III on Instagram. Follow me. You can follow our company at United Home Relief. And if you're ever interested in partnering with us on deals, or you need someone to walk you through deals, help you through deals, that is exactly what we offer as a service. Visit our website, www.unitedhomerelief.com, and you can see all that we do and all that you can be a part of. Again, I'm Art Morrison III.
I'm Cait McCready.
And we'll catch you on episode 3. See ya.